Hey, Anthony Pietrobono here, back with another video. In today's video, we're gonna go over the trades I made, my thought process, new trades, see how the stock market's doing. We got some news updates with stimulus and Donald Trump. So let's dive right into the video. Again, my whole goal on this channel is to share everything I do to build my own wealth, so that way you can now take away lessons to implement into your life so you can build your wealth faster through stock market investing. If you're interested in becoming financially independent or financially free with stock market investing, then you're going to want to subscribe and comment down below the stocks you're looking out for, the trades you made. Let's build up that community, guys. Really looking forward to hearing from you guys down in the comment section below, and let's dive right into the trades I made. Right now the portfolio is sitting at 826,000. The changes that we've made here are that we've added more TECL. I bought the dip. We saw that TECL was around $360 a share just a couple days ago. It dipped yesterday, October 14th, so I bought about 300 shares. And then TECL dipped further today on the 15th, and I purchased 200 more shares at $334, which brought my average cost down to $347 after buying 2 times. We see that I put $173,000 in US in this, and we're down 2.8% because it's currently at 337. So we're already seeing a bit of a recovery today. Reason why we saw a big sell-off in the market, if you take a look at the Dow Jones, we're seeing that it was looking very dim for stimulus talks. And we are seeing interviews where Mnuchin comes on and says, we're really looking forward to getting a deal done anyways. We see Trump being interviewed at 10 a.m. saying that, Nancy Pelosi is going to come around and we're going to get a deal done. So when we see these people coming on and they keep reinstilling hope that a stimulus is coming, and then we get these brief little blips where someone comes out, Donald Trump, Nancy Pelosi, or Steve Mnuchin comes out and says, yep, we're not going to get the stimulus until after the election. And then we see these sell-offs. And that's my strategy right now. I'm taking advantage of each of those sell-offs. My whole strategy right now with TECL, remember TECL is a tech ETF, and it's 3x leveraged, which means that you're going to get 3 times more volatility, up or down, right? Could be good if you're right, could be bad if you're wrong. And the reason why I purchase it is because it relies on what the overall economy is doing for the most part. So whenever we see the overall economy taking a dip, this fund will likely take a 3x dip. And when we see the overall economy recovering, this ETF will likely see a 3x on the upside. So my whole strategy is every time we see these dips based around stimulus talks, I'm buying, because we know for a fact there will be around $2 trillion worth of stimulus being given to the Americans shortly after the election. So in sometime in November, if we can just ride out this volatility until the end of November, after the election and after this stimulus has been given out to everyone, we can assume that we're going to be near all-time highs or breaking all-time highs in the stock market. So when we see this sell-off, it's an amazing opportunity in my eyes to go ahead and buy. And that's what I've been doing, and I've been currently doing, and that's why we're seeing my positions are growing as we see red. Remember, we want to be greedy when everyone's fearful. We want to be fearful when people are greedy. So in my eyes, everyone is trying to sell off on the news of no stimulus coming in the near term. But we also know that stimulus is inevitable. So if we can be patient and ride out any volatility for the next 1 to 2 months, we know there's a high likelihood that we're going to be nearing the all-time highs after that. So I'm playing that. That's my whole thought process behind the TECL trades. We see my position on ARKK. We are now down, and I would be looking to add more to this position if we see ARKK drop below 100. If it breaks below 100, I'm going to definitely be adding more shares to ARKK. Square, we've seen a little bit of a pullback, totally normal, and it's sitting now at about 187 a share. It had a crazy rally all the way past 190 from 170 in just about a week and a half. So with the rally like that, I could totally see this pulling back into the 170s. With Square, I built up my position quite well. We are sitting around 90,000 US. So I would be looking to add to this position if we break into low 170s or break 170. If we break 170, I'm definitely adding to Square. In the near term, I don't really see the stock breaking below 170. I can see more pullbacks, but judging by the history of the stock, there isn't a whole bunch of volatility and major pullbacks that this company has. It's kind of usually just like a steady increase of 1 to 2% a day with minor pullbacks. So I don't see any news coming out or anything negative coming out on Square. We do have earnings coming out November 4th, so that is a positive catalyst for the company that's coming up. So there's a lot of people that aren't willing to sell into those earnings because we are expecting them to be quite positive earnings as well. Remember, it's a growth company, very high growth, growing revenues of 50% year over year. So Square is my most confident company, second to Tesla. Tesla, I am of course the most bullish on. Square is the second company I'm the most bullish on. So those are my two biggest trades. I could foresee my portfolio being fully concentrated into Square and Tesla in the future. But for now, I am liking the opportunities I have seen on trading the overall market, going for the 3x leveraged tech fund, TECL. So I will play around with margin on those short-term trades, and then I may sell out of the ARKK position and put more into Square if I see an opportunity. For now, that's what we're looking like. I'm still holding that Tesla call option. It did pull back substantially. I'm now up $800 on it. We were actually up 80% on this at one point when Tesla stock was trading around $464 per share just yesterday. But today, it's around $447. Not concerned. We're seeing a little bit of a sell-off. In my opinion, yesterday, part of the big run up yesterday for Tesla stock was Ron Barron coming on and saying how he sees Tesla being a $2 trillion company by 2030, which implies a 400% upside from here. A 400% upside from here on this company, that's going to put a lot of people buying into that momentum and trying to get a piece of that. So that's what we saw yesterday. That fueled that fire, that 3% gain, getting all the way up to 465, and then a little bit of pullback into the closing at about 461. Now, October 15th, we're seeing Tesla currently sitting at $446 per share. And we could see it sitting around that 440 to 450 a share, in my opinion, until Monday. I think Monday we actually will see a spike. It could be 3 to 5% of people buying in to get in right before the Tesla earnings. And then when the earnings are released Wednesday after market, on the Wednesday, we could see the stock being anywhere trading around 460 to 480 a share going into the earnings, in my opinion, based on the charts and what's coming in terms of news. But this is also dependent on stimulus talks, because if we get some sort of stimulus talks earlier on, we could see the stock higher. If we do get some bearish news out, like full economy shutdown or things of that nature, or a stimulus package not even being passed for months down the road, then we could definitely see a massive correction in the market, anywhere of around 10%. So, it can go both ways. Obviously, no one knows exactly what's going to happen in the short term, but we do know what would happen in the short term if certain cases play out. Currently, I am leaning towards the fact that we will see stimulus be approved and sent out just after the election, early November, and we're going to see a lot of people, in my opinion, entering back into the market because there's a lot of money on the sidelines from people who don't like to be in the market around elections, because history shows it's extremely volatile and there's typically sell-offs going into the elections. We don't go into elections at all-time highs. There is volatility, so people are sitting off on the sidelines waiting for the election to pass so they can go ahead and put their money in the market, feel confident, and sleep at night going into the election. So again, this is why I'm bullish over the next 1 to 2 months, and this is why I'm making these short-term margin trades on these companies right now, where I could see myself taking profits in December to January. For now, we're going to ride out this volatility, and we are going to take red days as buying opportunities. This is how I sleep at night. I sleep at night knowing that, hey, when there is a lot of red in the market, they are buying opportunities. And if I don't have any money to buy, then don't stress, hold. If we're looking to build wealth over time, we're going to want to accumulate more stock and spend more time in the market, average down our cost basis on red days, and ride out those green days. So if you have any questions on this, shoot them down in the comments below. Let me know what kind of videos you'd like to see more of. Thanks for watching, and I'll see you in the next one.